Hi there, I'm going to take you through a company I've been buying this week. This is not investment advice, this is my research. I make some assumptions here, so please do your own research, okay? The company is Totally, TLY is ticker. Now, it's not the normal kind of company I buy. I normally like to buy pre-revenue stocks, resource stocks. This is what some people would determine a proper business, proper money, proper revenue. I don't let that hold me back, you know. I'm not a snob in that respect. I'm in the stock market to make money. I don't care whether the company's a pre-revenue company or it earns a tumbler of cash. Now, I like Totally because I like microcap stocks, and it's come onto my radar because now it's a 12 million market capitalization. That's the value of the stock, okay? Now, 10 million of that, 10.2 million as of March was cash. So 82% of this company is cash. That's the value. So everything else they've got is valued at a couple of million. That's all. That's one of the reasons why I like it. It's hardly valued whatsoever. What do? They basically are an out-of-service or out-of-hospital NHS sort of provider of services. They have about 6 subsidiaries there. Premier Physical Health, About Health. The big one at the moment is Vocare, okay? And that is what they acquired in October last year. But that's the big money spinner. That's a bit of a journey so far of Totally. You can see that on their presentation on their website. So 5 reasons to add them to your watch list. This is to do more research, not for you just to buy and say, oh, if it goes wrong, blame somebody else, okay? Do your own research here. I could be completely wrong here. I mean, you know, like I said, normally I don't buy it, revenue-generating stocks. Anyway, the fundamentals is reason 1. They bought Vocare, which is an out-of-hours service. It does the 111 telephone calls, you know. It does GP out-of-hours service, NHS 111 service and call centres, all that stuff. They bought that for 11 million, okay? Now, this is Vocare's revenue figures, basically, for the end of 2017. You can see here, 76 million it turned over, and a gross profit 9.3 million. They made a slight loss on that, I think, a net profit. But you can see the kind of revenue here. It's phenomenal. Now, there was a bit of worry when they took over this because there was operational issues, but they're sorting this out now totally. Anyway, so these are Totally's results. So Vocare is the company they bought. They've got 6 other companies, like I said, 5 of them subsidiaries. But Vocare is the company they bought. And the reported revenue for the year for Totally, so this is ended, this is a 15-month period, okay, because they brought their reporting line, their reporting date in line with Vocare's and the NHS's, which is the 31st of December. So 15 months to the end of the 31st of March, they turned over 42.5 million, gross profit of 9.3, and pre-tax loss of profit of 2.1 million, pre-tax in a profit. So you can see from that, it's crazy valuation, you know. This entire company is valued at 12.4 million. Strip out the cash, it's valued at 2.2 million, which is pretty much what they made in pre-tax profit. Now, this is an exceptional item here, so they are going back to loss next year. But I'll show you later when they intend to be profitable. Now, reason 2, new contracts. Since the end of year results to the 31st of March, okay, since that, they've won 8 new contracts worth 5.6 million for this year, for the financial year for 2019. So that's already 5.6 million. Now, the reason why this is 42 million up here is because it was only 5 months of Vocare's sort of revenue in that, so financials in that, you know. If they'd taken the full year, it'd been up to around 80 million total revenue for Totally. But anyway, so this year so far, after March 31st, they've won 8 new contracts worth 5.6 million for the next financial year, 2019. All right. Now, quite a few of these contracts have options to extend between 3 and 5 years, and that would make their entire value worth 18.4 million. Now, remember, this is a company still valued 12.4 million. 10 million of that is in cash. And yet these contracts, they're landing every day, you know, pretty much. Reason 3 is restructuring. You can see here's the breakdown of Totally. So this is the different subsidiaries. About Health is, of course, in the green, mainly Northwest. Premier Physical and Optimum Sports Performance is pretty much all over, but of course, run about the Southeast as well, or Midland, Southeast down here. Totally Health, well, where is that? Can't find that. There's a light blue one somewhere. It's there somewhere. You probably spot it. And Vocare, you can see, is quite national. But that was a transformational deal, Vocare. I mean, you know, operationally and financially for them. That's the big part of the company, Vocare. Now, this is a buy and build company. This is what they're doing. Like I said, that they acquire businesses in similar sectors and they can achieve efficiencies, synergies. So that's what they're doing at the moment. With Vocare especially, when they bring these companies in, they can achieve some economies of scale. They can cut back on certain departments or replication of things. Now, the problem with Vocare, when they took it on, there was an issue with the quality of service. But you can see they've already improved this. So they had, who is it? The Care Quality Commission inspect Vocare after this, after the Totally acquisition of it, and you can see in the inadequate part of the business there was 2. There's now just 1. It requires improvement. There were 5 parts of that business. Now there's 4, and now the good has gone from 11 to 14. So it's have been inspected. So it's improving. Now they're saying that operational changes at Vocare is expected to achieve around about £1 million worth of savings. I spotted a spelling mistake there. About £1 million worth of savings from that. Now, reason 4 is a conducive environment. The NHS needs to save money. And it's doing this by moving, people out of A&E, out of hospitals, if they can be cared for elsewhere. So a very important document here was the NHS in August 2017 published their Integrated Urgent Care Service. And this highlighted this. And this is the aim to provide care close to people's homes and help tackle rising pressures on all urgent care services. So, of course, when people go to a hospital, it costs a lot of money. They're tying up staff there. And so they want to get rid of that. And they reckon they identified between 1.5 and 3 million people who attended A&E each year could have their needs addressed elsewhere. So this is where Totally comes in. Like I said, Totally's integrated urgent care service is 30% cheaper than it would be if they went to A&E. So you see, Totally can provide the NHS the service. It'll save them money and it'll also save them pressure on the resources. So this market, by the way, is estimated to be worth 20 billion. And it's not a decreasing market, it's an increasing market. NHS will always be looking to save money in some way, make more efficient decisions. So Totally's in the sweet spot here. They are providing the NHS with a cheaper, better alternative. So that's reason 4. Reason 5 is sellers. This may seem an odd reason to you, but they've got quite a big institutional holding. There's about 50% or more, in fact, more than 50% of the stock is held by institutions, which is unusual for a small cap company. But the share price hasn't performed, and some of these institutions have been selling down, and sometimes an institution will sell for no reason. There'll be a strategy change at the company. Invariably, I do say this, mostly it's not a reflection on the business itself it's holding, it's just internal regulations, changes at the actual institutional house. So Lombard Odier, they have been selling for about a year now, and they're down to, what are they down to? So, and Mighton Group. There's been a lot. There's been Legal and General. There's been Mighton Group. There's been Mighton Micro Trust Group as well, and there's been some others. So I do mention this, but these guys have been selling heavily, And when you get like downward pressure in the share price, obviously the valuation of the company goes down, the share price goes down, but that provides opportunity. I've seen this happen plenty of times. And what happens is when a seller clears, because they've always got sells going on in the book there, when they can clear the stock, when there's liquidity in the stock, they'll sell. When the seller clears, you'll normally see quite an aggressive rebound in the stock, and this could happen here. So Mighton, so Legal and General Assurance Society and Mighton UK Microcap are completely out. All right, they've been selling. But Lombard Odier notified Totally that they held 4.6 worth of shares in July, 19th of July. Mighton Group notified them on the 4th of May. They were holding 3.59%. So I don't know if they're going to completely sell out, but at the moment, if they do, there could still be downward pressure on the share price. So that's why I always scale in, If they're out, I think the share price will rebound. But at the moment, those two companies are still a fair chunk of stock. When you think about it, that's about, 5 million shares. That's a tenth of the company, because there's only 52 million shares in issue. So there still could be some downward pressure on the share price if they continue to sell. So that's the 5 reasons. I also look at my cash model when I'm investing. And as you see, green here is positive, black is neutral, and red is negative. Capitalization, green, it's below 20 million. It's a micro cap or small cap stock. Chart, I like this. Look at it. It's bounced off the 20 pence area quite a lot. but it's bottom right of the screen. It's not been spiking or trending higher, aggressively. So I like that. Assets over the next 4 or 5 years, I reckon, like I said, I think this company could be valued in excess of 100 million. I think if they achieve double-digit pre-tax profits, which isn't a stretch, let's be honest, they could be valued in excess of 100 million. I don't think it'll happen overnight because it's a slower-moving company than sort of resource stocks, but I think it will get there because the guys, the board are very experienced. It's worth looking at the balance sheet or the financial position, but they do explain it on their presentation why they got such big intangibles, and they have net current liabilities at the moment, but that's because of the payment cycle of GPs against their received cycle from the NHS. Shareholders, like I said, very sticky. These are all the institutions. I just don't believe that's true. I think Legal and General out. I saw a TR1 from that. So I've done some calculations. But even so, still 50%, over 50% held by institutions. That's there's quite a lot of stock locked up there. Directors, I would like to see them holding more. Bob Holt has got 1.7%. Wendy Lawrence, just hardly any really. She's CEO. I would like to see more, especially at this level. She should be taking advantage of the share price. But like I said, sometimes CEOs are not investors or traders. They are business people. I don't think that's an excuse there. I would like to see her buy more at this level. Significant milestone. Looking at the previous year's statements or releases, they could be releasing a trading update soon, I think. I hope, anyway. Simplicity. Yeah, the company is UK-based, no jurisdiction issues there. It's a clear strategy. They're working in an environment increasingly conducive to their business plan. I like this very simple plan here about helping the NHS achieve better efficiencies. And head honchos, Bob Holt's chairman here. He was the chairman of Totally. Impressive track record. He purchased Mears Group in 1996 for 50 grand, brought the company to the stock market. It's now worth 375 million. So he's doing well. There's my summary. I look at some brokers' forecasts there. So two different brokers here. So one, Capital Access, reckons they will be break-even 2020 and pre-tax profit in 2021. Allenby is slightly more optimistic. They reckon Totally will make a 50 grand profit in 2020. Oh, well, and obviously they'll be more profitable in 2021. But I just think this company is completely undervalued compared to the potential it has. So that's my take on Totally. Worth looking at, like I say, in a very good area, good track record. The shares are very well held. They've got cash, 10 million of cash. The company is valued at 12.2 or 12.4 million. That's crazy, So, there's only 2 million worth. Everything else they have, all the companies they have, all the expertise they have, everything is valued at the moment at 2.2 million. That's all it is. To me, it's undervalued. To you, do research, okay? Hope you liked the video. I'll be doing more of these videos looking at stocks I bought. But by all means, like, share, comment, ask any questions if you will. And most importantly, please hit that subscribe button and you'll get these videos straight to the front screen of your phone, especially if I hit the bell, subscribe, then hit the bell, and you will get these videos straight to the front screen of your phone whenever I release one, which is going to be once a week. So you won't be deluged with lots of notifications. I won't spam you. But yes, please subscribe. Thank you very much. Hope you enjoyed it. Give it a thumbs up, like, share, do whatever. Thank you.